Good afternoon, August the 27th, 2015. Time to wrap it up for the day. People are looking for a reason to explain the market sell-off that came off pretty handily. The JP Morgan's head quant, which started the selling at the end of last week, put out a message today saying that the second market crash may be imminent. Violent selling could return on Thursday. Well, today happens to be Thursday. That article made it to zero hedge on 14.20. The spill started at 14.15. So, like we said today, that there were dangers of a news spike out of Jackson Hole. It didn't come from Jackson Hole. It came from JP Morgan, it looks like. Okay, today was pretty choppy selling. We had resistance basically at 70 to 80. In this area right here, the market did make it up to 86. We had buying in the 45 to 50 area. Didn't quite make it down to 45 to 50. The market ran up. I had supportive news this morning right here that took it up off of its lows from where we first entered the market. So the first trade that set up that worked was this S, and it was good for, the first trade that set up was this buy, and it was a loser. The second trade that set up came off a software generated trade, and I think you could have just gotten 4 points out of it, 3 to 4. No trade on this B. This retest failure was a winner. This S trade right here, I got 2.5 points out of it. It was good for 3 to 4. Slow grind up. All these trades work, produce small winners. Little correction here off of 85. Market was coming up, and then that's at 14.15, about 5 minutes before the zero hedge article hit the wires on sell. No trade here. Reverse RTF off that bar's low. Now that was support. Now it's resistance, and when we took out the 65 area, the selling accelerated. So this market is going to be subject to whim and fancy. It's going to be whipped around. I don't think the selling is over based on the deteriorating fundamentals. All markets around the globe are held up by central bank covert and overt intervention. Interesting article out today talking about the Swiss National Bank's holding of stocks, which would be way out of line, and the Fed not allowing for an audit of their books. So there is some feeling out there, or some commentary, that the Swiss National Bank is buying stocks for our Fed. Wouldn't surprise me. I mean, what can surprise anybody anymore about what governments will do and have done and will continue to do? It's that's where you have it. So this is the E-mini today, higher low, higher high. If we can't take out this 50 area, this 35 to 50 area, and these are pretty big, that's a pretty wide range, no doubt. The market can trade back up. We have Jackson Hole tomorrow. They break up on Saturday. We've got personal income plus 0.4. Personal spending, we'll get the plus 0.4. That will catch the market's attention. PCE, inflation has played because the Fed says they will raise rates when inflation comes back, plus 0.1. Consumer sentiment, 93.3. Hard to say where that was going to come because this is the Michigan consumer sentiment, market sentiment. They have it at 93.3 based on the last consumer confidence number that came in at 101.3. And then at 1 o'clock, Baker Hughes rig count. So personal spending and perhaps consumer spending, and then Jackson Hole for tomorrow. Looking at the F2 screen, Okay, in K period it started down. These would be the correct splits. Actually, this would be the correct split. Putting it all in. Moving up in D period and then L period. So we've got all this volume down here in this 35 area. Obviously, you got to bust 50 and stay below 50 to get to it. And we didn't take out the rally that came out of the 40 area. So here's where we sit. This is on 2-point increments, so we're taking a pretty broad brush. So 60, 65, sell 1, assuming we close at 56. And then 75 to 80, sell 2. Got to give it a lot of room. Just big broad numbers, 40, 45, buy 1. And then our breakout came down here. Make it 25 to 30, buy 2. Okay, looking at the financials, we had a very strong auction today. That was the first auction this week that was strong. And off the selling in the stock market, haven't gotten much in the way of lifts, so the financials aren't going with it. Lower high, lower low sellers coming in tomorrow. My guess is we probably have a pause day. There's a lot going on. I don't think anybody, the market's been hit pretty hard, so looking at this screen, 28 to the buck, sell failure to take that out. And then that last rotate up the other day was there. So the 8 to 16 area is probably pretty good resistance. We got a D period high at 17. We got an H period high at 12. So we'll make 11 to 15, sell 2. On the buy side, 21 to 17 worked out pretty well for us today. And then 5 to 9 if we take it down. It's just there's a lot going on. Given this late sell-off, considerable 40 points in the E-mini. Well, everybody will be seeing what's going to go on in China and how many people they're going to arrest and put in jail to stop the selling in their stock markets. That'd be something, you know. You sell your stocks, you die, or at least go to jail. You can see why people still try to find ways to get out of that country. You can see why the wealthy have been trying to get their money out of the country. They've done it by buying real estate in fancy places. Okay, M period highs at 29. We had the breakout in I period that took us up above 23. We're at 15, so 23, 27, sell 1. And then 3 to 7, sell 2. And again, it might take a 19. I mean, it's really hard to say with these big swings. But one thing for sure is that the inverse relationship between treasuries and the stock markets is not holding up. Got a buy down here on the auction, 5 to 9. Make buy 1. Revisit that, and then 25 to 29. On the GDP numbers, like we talked about earlier this morning, an inventory build, historically, that's where recessions have started. The inventories build too much, and we've had all this just-in-time inventory management. And hopefully they're on top of that where they don't let their inventories get out of hand. The articles coming out, you know, when you get a good headline, they talk in terms of strong economy, economic growth is returning. When you get a weak headline, they talk the other way. So we're getting mixed news from the financial press, but the meme push by the fed for the financial reporters is the economy is getting better, and by God, you better report it that way, or else. It's we just have to sort it out day by day. Inside day, just by a couple of ticks on the downside. That usually means trading range. Hard to say. News that would normally have rallied gold this week hasn't. So it's not tracking as close to the news as you would expect. So we've got support 15 at 17. So that's when our buy is going to be again today. And then 10 to 12. On the sell side, 24, 26, 29 to 31. And we haven't seen risk off, risk on commentary associated with gold middle of last week, nor this week either. That's a little change in how the gold trading in gold is being reported. We do live in interesting times. Huge day, basically 39 to 42. That's 300 plus ticks, 350 ticks. That low right there, start of the new distribution, so 43, 43 and 50. Probably pretty stout resistance. We got this low volume at 42.89. So I think the easier trade to see off of this kind of a rally is failure to extend today's highs in the London, or failure in London to keep trading higher. I think that could set up a very, very nice short on the assumption that this was just short covering. So here we are at 19, 42.50, 42.75, sell one, 43 and a quarter, 43.50, sell two. On the buy side, we broke it out at 41.50, so 41.50, 75 buy one, and then our 41, 40.75 buy two, and we'll see what we get. And last but not least, the euro. Sometimes the euro is traded up off Chinese intervention, sometimes it's traded down. So last 2 days we've been trading lower, 3 days. And I think last night was the 6th night China intervened. So my guess is the weight of the European Central Bank and the rest of it is taking us down. I mean, they want to export outside of the European Union. So that requires a lower euro. So lower high, lower low off the F1 screen. We're looking for a place to sell it. And we got this low volume area up here above 113 even. So 113 even. Well, sell 75 to the buck is where we are right now. M period got up to 83. So sell 175, sell 2, 11300. Last rotate down in J period was 35. G went all the way to almost to the buck, so buy 1, 1225, buy 2, 112 even. And that's it for August the 27th. Next to last week of summer. I guess next week will be the official last week of summer, but we'll pick up Tuesday as the start of September. So the summer has come to a close, or is coming to a close. We've got hot weather in the 90s forecast over the weekend and into next week, so still summer here. And I'll see you all bright and early tomorrow morning. Y'all have a great evening.